Firstly, our mission is initially, at least for many years, connecting global capital to small and micro businesses in China as a starting point. So therefore, capital funding side is outside China, but the asset side is inside China. So it needs to be an international exchange because international investors need to buy an international underlying. So therefore, the market operator that issues those underlying certificates need to be international. So therefore, we are not going to be doing it in Shenzhen or Shanghai in mainland China.
Either Hong Kong or Macau.
Yeah, it has to be. Obviously, between Hong Kong, Singapore, Macau, and any other possibilities, the discussion, we had discussion with quite a few jurisdictions, but people need to understand how this product works because the underlying product is daily revenue contracts in China. But when it become international products, they're becoming a DRO, daily revenue obligation, but that, most of the regulator ask the question, is that security? Or is that futures? Or is there any other traditional financial product? It is none of any of them. It is not any one of those traditional products. It's a completely innovative, digital age driven and enabled financial instrument, but is not traditional securities and futures. And so while the conversation continues with all the other jurisdictions, all boil down to which boxes to put you guys in. When we had the conversation with Macau authorities, Macau authority instantaneously recognized this is something that they are very familiar with because they're saying that we've been doing this for decades. At the beginning I said, well, what do you mean you have been doing this for decades? They said, well, when a casino opens, as long as there's a revenue every day, the government goes in there and literally take the daily revenue tax directly from the casino. So the government obviously is able to do that by issuing a casino license to the operator, which entitled the government to go in there and collect on a daily revenue tax basis. We, in a very similar manner, provided capital to a small shop, which entitled investors to take a daily revenue contract entitlement. So it's that similarity give Macau authority an instantaneous understanding of what we're really talking about it, and particularly how risk can be easily managed because of this daily feature of this new financial innovation. This new way of investing, the asset side is in China, into the future could be global. The funding side currently is outside China, is global, international, but one day it could be also funding from China as well. The exchange licensed venue is in Macau. And so people sometimes ask me, how Macau fit into all of this? I would usually describe it this way, that big finance, because ultimately global capital going to small shops, being the vision, the global capital is really the biggest capital, and where is it? It's usually in the banks, at the big insurance companies. They're not going to change. They're not going to go into this new way of investing on daily revenue. They basically say either fixed income, bond or debt or loans or equity, that's all. So let's just say they're basically the big money saying, I only eat bread, which is fixed income, or I eat noodles only, or I buy noodles only, which is equity. What we're doing here, both bread and noodles are securities, a traditional security financial product. But what we're doing in China, at least now, are really contractual commercial contracts that are inconsistent with securities. So we call that the daily revenue contract in China. That's almost like in China we're growing wheat. We're actually growing the crops there. But the big money saying, I don't understand what is a crop, what is a wheat. I only understand bread or noodles. So they're not going to want to look at it. So we have to find a way to bring those domestic wheat or contracts. First of all, give them an international identity paper. So that's why the daily revenue obligation came. Daily revenue obligation is a piece of paper issued by an international market operator, Macau Exchange. And that DRO is stable together with the DRC. So whoever bought the DRO in international market receive all the benefit of that DRC. So the DRO is almost like in Macau, we need to grind the wheat into flour. That's why give them an international paper, put them into investable format like a DRO, international certificate, it's flour. But still big money in Hong Kong or Singapore or US and London saying, I don't understand what is a flour. I only understand bread and noodles. So we need to then package all the DROs, which is our individual contracts, into DRPs, daily revenue portfolio. It's basically big pockets and big portfolio of the DROs. And then you give the banks the senior tranche of it. That's more like a bread now. That look like a security, look like a bond, look like an asset-backed security, ABS. The bank said, oh, now I understand what it is. So therefore, we need to come to Hong Kong or Singapore to convert the flour into bread. And then all the money coming into the contract go to the bread first. And then when the bread is paid off, the banks are paid off, the residual higher value, like noodles, go to the restaurants and go to the equity investors, the hedge funds. So Macau is now a very important part of the future supply chain or manufacturing chain of this new form of financial product. Well, let's just compare ourselves against the Hong Kong Exchange first. Hong Kong Exchange every year, as I said earlier, have about 100 to 200 new listings, raising, capital. First of all, people remember Hong Kong Exchange largely because of the secondary market trading of the equities. For our business, every stock is not going to get traded that actively. It's more of an investment market rather than a secondary market trading market. Although when you become enough scale, there will be a lot of changing hands with a lot of valuation, but it's not about secondary market speculation of the future value it's going to be. So from a trading perspective, we are apples and oranges. But from a raising capital perspective, we are apples and apples. So Hong Kong Exchange every year, you have about 100 to 200 companies coming to list, doing IPOs or doing add-on financings, raising, each raising, let's say, average $1 billion. So together it's a $200 billion capital raise every year. Last year, obviously, very low. It was only 50 billion last year, and I think in its peak, I remember on my third year at the exchange, we reached 800 billion. But typically, it's a 200, 300 billion Hong Kong dollar for capital raise every year. In 5 years, I think MCEX, if we succeed, if everything goes as planned, we could have maybe 100,000 small shops coming every year. But each only raising just a couple 100,000 yuan. So that's essentially is similar to a 200 billion, 100 billion and 200 billion capital raise. Whether that we achieve that in 5 years, in 8 years, I don't know, but we will be there, and we will be there. Once we're there, it's going to be continue and continue and continue. So that's one big comparison that our future from a capital raising perspective is going to be just as good and strong as a traditional market, giving us the time. But in terms of our geographical coverage into the future, we are likely going to become a franchised, a market, that everywhere that we are able to have a partner, as long as they are able to generate local brand and local needs into local stores, then we can bring them to list in Macau, MCEX, and then